It's the 22nd of January 2015. My name is Jack Watts, lead market analyst for AHDB Market Intelligence. As is usual, a quick market update on what's happening in the grains and the oilseeds market. It's fair to say that 2015 so far has been pretty bearish for the grain markets, a pretty pronounced downward trend. Until recent days, we've seen a little bit of an uplift in price. A lot of the catalyst, to my mind, was the data that came out from the USDA earlier in January on global supply and demand, but also interesting data on US quarterly grain stocks, which always tends to spark a little bit of volatility in the grain price. That served really to remind the market of the strong supply fundamentals that we faced this year. Prior to that, we had a month, 6 weeks of really sentiment driving a relatively bullish trend in the market in response to the issues emanating from Russia and Ukraine, some hints of some weather impacts on the new crop. The issues emanating from Russia and Ukraine remain. They remain drivers of sentiment rather than the supply fundamental, given that a lot of the exports from the region have already happened when it comes down to wheat. The key question in my mind is, though, will those issues persist into the new crop? Will restrictions on Russian exports persist into the new crop? If that does occur, then that has much more of an impact on the new crop than it potentially has on the old crop, because it could well impact the main exporting season for, say, the Russian wheat crop. That will be a function of what the weather does in Russia for this growing season, and of course how the Russian ruble changes against the dollar. Sort of the perfect storm scenario is a very weak Russian ruble against the dollar, and a weather issue as well, which may well increase the incentive to try and manage exports of Russian wheat. But we've got a long way to go before we can reach any firm conclusions on that. Really domestically, a big issue is really the strength of sterling against the euro. The lion's share of UK wheat exports have to go into the eurozone, and a strong sterling against the euro essentially means that our exports are less competitive in euro terms, and that has negative price implications. For barley, the impact of that is less severe, because a greater proportion of exports, say around 50% this season, will go into markets outside of Europe, so less vulnerable to that strength of sterling against the euro, and benefiting really from a relatively weak pound against the dollar. What do we think about new crop? What's the view on the new crop? Well, really, it's too early to get excited about the new crop. Through late 2014, we were hearing issues about cold weather in the US and Russia impacting wheat crops there. But the reality is that it is too early to get too excited about new crop. We really have to wait for the spring to arrive, crops to emerge from dormancy. But what's becoming more and more important is really spring planting, especially as maize becomes more dominant. Maize is spring sown. That basically increases the importance of the spring season, not just on growing crops, but also for the planting of crops as well. Moving into oilseed rape, and again, just like we've seen in grains, the strength of sterling against the euro is having a negative impact on the price in the UK. As with wheat, we're very much a part of the European market and have to trade into that eurozone. From a fundamental point of view, on the global scale, the data out from the USDA earlier this month basically told us that the market had a strong supply of soybeans in the US, coupled with growing confidence towards the size of the Brazilian soybean crop, and that gives us a pretty bearish trend or bearish sentiment for the oilseeds market. In the background, there's a lot of discussion about what does crude oil mean for vegetable oil prices, and so oilseeds. And it's fair to say there is a crude relationship between oilseeds and crude oil, but it is very, very crude, so it's not going to be the primary driver. It gives us a bit of a backdrop as to what might happen, but really we have to assess the near-term supply and demand. But with anything, we're waiting to see what the spring weather does. How will US soybean plantings progress? How will the European rapeseed crop look? And that's a number of months away before we start to assess that, so at risk of being in a bit of a limbo period until we start to see spring weather. So now we're going to look at a piece of work that we've recently started back in the autumn, looking at modelling some pricing strategies for the 2015 wheat crop. So essentially we have a theoretical farm with 66 loads of feed wheat to market for the 2015 harvest. Leading this work for us is Anna Lockwood, one of our analysts within Market Intelligence. So Anna, would you like to take us through the 5 strategies that we're looking at for the 2015 crop?
Yeah, so we're focusing on 5 strategies this season. We've got a few new ones in there, but we have the first 2, and they're fairly simple. We have the post-harvest averager, where sales are averaged post-harvest, post-planting, where sales are averaged post-planting. We then have cautiously forward, and this strategy focuses on a small amount of the crop being sold at the beginning of the season, and then the rest of the crop being sold towards the end of the season. 4/3, and this is a new one we've got, which is sort of a bit of a modern twist on a more traditional pricing strategy, and where we actually purchase a call option on some of the wheat here. I'll go into a bit more detail later. And then we have the end of season speculator, which really focuses on all of the crop being sold at the end of the season. Although here we also have a put option used, which gives some protection against the downward prices.
Okay, so if we consider then what's happened since the crop was planted back in the autumn, between really the autumn and Christmas, we saw quite a bullish trend in the market price. So to my mind, that says, well, almost a do-nothing approach was the best thing to take on there. And that's going to mean that price, that strategy is going to come out on top. I wonder now, though, now we've come into the new year and we've got this bit more of a bearish trend in the market. Is that still the case? Or are the rankings changing at the moment?
Yeah, so they are slightly changing now. I mean, after that really bullish period throughout December, the post-harvest averager was well out on top, and because this one has sort of maximum exposure to the rising market, so that one was at the top of the rankings. Although now with this bearish trend setting in again, although that maximum exposure was great for the rising market, now with the falling prices, actually we're starting to see the rankings change slightly. So that the post-harvest averager, with all that risk, is now beginning to drop down the rankings, and actually we're starting to see the strategies with more resilience sort of now coming into play a bit more.
So you've touched on there the strategy, the post-harvest strategy, which is maximum risk but maximum reward. I wonder now that as it stands at the moment, which strategy is giving the most resilience against this falling market?
Well, you can see if we look a bit more at sort of a breakdown of the volume exposure, that the 4/3 strategy actually has 44 loads protected from a falling market. So although when the prices were rising, this strategy didn't seem too beneficial, now with the prices falling, with this protection from those falling prices, actually now we're starting to see it come back into play a bit more. And as I touched on earlier, it's sort of a bit of a twist on that traditional strategy when the sort of crop was just split into thirds and sold. Actually, what we've done here is, although we have sold 2 loads, what we've done is purchased a call option against one of those loads. So now we have the unsold load open to rising prices and the opportunity there, but also one of the sold loads we have open to sort of the opportunity of the rising market now with the use of that call option.
Okay, so it's quite an interesting strategy. This is almost delivering the best of both worlds, isn't it? Mm-hmm. On the one side, there's 44 loads of wheat that have been sold, and that's quite an aggressive approach this early in the season, and one that maybe a lot of farmers may not be comfortable with. But and that's giving a big downside protection, which is now beneficial given we're in a bit of a falling market in recent weeks. But the other side is that there's quite a lot of upside opportunity left open, because not only are there 20 loads of physical wheat left to rise, but also then the use of the call option is actually opening up some upside exposure as well. That of course comes at a cost with the option premium that needs to be taken into account, but certainly it looks like to be a resilient strategy.
Yeah, this one is sort of such a good example of how sort of pricing strategies can help you manage the risks of the market. And really now in the sort of coming months, it's going to be really interesting to have a look and see how the rankings change and sort of dependent on the direction of the market. So we are going to be having a look at these up until the end of June 2016, so providing regular updates on the website.
Brilliant, thank you very much. So what we've seen in today's video is we've had a bit of an overview of where we are in the grain market, a bit of a downward trend in price, but there's a lot of time still to happen. There are a lot of things still to happen, and the big thing, of course, is we're waiting to get into the spring, and we're waiting to see what the weather's going to provide. We've also taken a look at just some of the pricing strategies we're modelling. And so what you're able to do is keep an eye on the HGCA website, hgca.com/markets, for very regular updates on both what's happening in the market, but then also to keep pace with how these different strategies are performing in what is a very volatile, very uncertain grey market.